You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. You know what's going on in the world of futures options? Well, let's find out together. It is time for TWIFO, This Week in Futures Options. Remember, if you like what you hear, not just for this program, but for everything we do throughout the week here, multiple shows hitting you a day here on the network, you know what to do. Head on out to your platform of choice, wherever you're getting this, Apple Podcasts, Google Play, Spotify, YouTube, wherever you get it. Leave those comments, leave those reviews, so that other people can continue to discover the network in these troubled times. We've seen so many new listeners joining us over the course of 2020. So keep those reviews coming so they have a place to turn in these tumultuous markets. Keep those questions coming, too. We do love to hear from you guys. And let's see who we're hearing from on the old TWIFO program this week. First off, my regular compatriot holding down the FTSE Russell hot seat once again, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir.
Mark, it's great to be back. I'm really looking forward to today's show. So let's have some fun today.
Let's have some fun indeed. And we're going to do that because we have a great guest holding down the CME Group hot seat. It is time for his annual appearance here on the program. Our old friend, Mr. Derek Sammann, the Senior Managing Director and Global Head of Commodities and Options Products over there at CME Group. Derek, welcome back to TWIFO, sir. It has been too long.
Hey, Mark. Great to hear from you. It has been too long. Sean, always good to hear your throaty tones on the call as well.
This is normally where we do something live and in person, maybe down at an FIA or something else like that. But alas, Derek, those are not the times we live in right now, sir.
No, man, you're in your basement. I'm in my basement. God knows where Sean is right now. But we're doing it Biden style.
I'm in my basement.
A bunch of fun basements going on here on the program. Let's kick it off the way we always do, listeners, with our movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. Like the man said, this is where we break down all of the action to the upside and to the downside over there across the broad spectrum of products that are trading in CME land. Derek, as our guest this week, I will give you pride of place. Where should we begin our journey this week? To the light side, a.k.a. all the names that we're moving to the upside, or to the dark side, sir?
Well, I always go bad news first, so let's talk about the falling ones first and then finish on a high.
That's an easy one this week because not a lot of falling. Sean, I don't know why you and Derek get along so well because two very polar opposite personalities are going on over there. I can't get you to pick dark side if your life depended on it every week. So let's go to the aforementioned dark side. Like I said, there's not a lot of red on the tape. It's another one of those weeks, listeners, where roughly looks like about 80% of the movers and shakers are in the green here. We have enough to do at bottom five, but that's really kind of about it. Let's go to the dark side now. Number 5, live cattle off about 2.25%. It was another number 5 in the other direction last week, up 6.2%. So an interesting week out there on the cattle side. In fact, a lot of livestock on our bottom 5. Number 4, feeder cattle off about 2.29%. Number 3, once again, back out to the livestock. Lean hogs off 5.13%. Numero dos here, nat gas off nearly 13%, 12.86%. And that's not bad enough. Number 1 with the bullet. Yet again, it's been a rough couple of weeks here in the dairy world. Class 3 milk off 13.87%. It was number 1 in the same direction last week, but even worse, off nearly 22%. So a rough couple of weeks out there on the dairies. I don't know if more of you have been paying attention to dairy of late, and it is much more of an active, much more of a growing option story than it was when we started this show. So interesting to see, and maybe all this movement driving some paper out there. Now let's go out to the upside. Like we said, it's an aggressive upside week. You could pick top 30 easily, how many things are moving. Let's start actually one beyond the top 5. That shows how active of a week it is. We have to go to number 6 to find our old friend, the Russell 2000, up 3.57%. It was number 9 in this direction last week. Then to the actual top 5. Number 5, oats, going out to the ags again, up 3.92%. Number 4, soybean oil, up 4.21%. Had an interesting discussion about ag options on the program last week. All you ag heads, check it out if you missed it over there. Number 3, lumber, up 5.19%. Number 2 here, back to the metals, platinum, 7, up almost 7.25%. Number 1 with the bullet this week. You guys are always writing in week after week. Where's Bitcoin? Where's Bitcoin? Well, it's easy to find this week, listeners. It is number 1 with a bullet, up 11.24%. It was number 4 in this direction last week, up 6.19%. If you've been paying attention, you know it was threatening 16,000, then 17, then 18. Things just been on the rampage. Pretty soon it'll be back to those 2017 highs if it keeps up this pace. So check out our crypto rundown if you haven't done so already, listeners, on Monday, and maybe we'll have a chance to get to some crypto a little bit later in the show today. But I'm very excited we have Derek joining us today because it means that's our time of year where we get to look back a little bit and see what's been going on. Derek gets to watch over the entire options umbrella over there at CME. So he has always some interesting facts, some interesting data to share with us. Derek, we know it's been I think to call it tumultuous year is a little bit underselling it. So it's been an interesting year. Break it down for us. What's been going on across the broad spectrum of options products over there at CME this year, sir?
Yeah, you're right. Tumultuous is a great word for it. And in some cases, it's feast or famine in certain of these products as well. We had just an unbelievably fast kind of first quarter and a half of this year. We saw, certainly the energy markets just screaming both sides, moving prices down, coming prices back up. In the back half of this year, in particular in crude oil, we've seen the market kind of go a little quiet on us. It's been in about a $3, $4, $5 trading range for the last couple of months, kind of, plus or minus $5 on $40 oil right now. So after a screaming first 5 months of the year, oil's kind of come to a sort of limping into the balance of the year just as we get with tight trading ranges. On the other side of the energy complex, look what nat gas has done. Nat gas was at multi-year lows, down around $1.65 coming into this year, and we've seen that stream up close to $3 and pulled back a little bit. It was on your movers and shakers this week. There's just a lot of good, healthy macro support for gas coming up and staying up off these lows for a while, and that's been a huge, huge market for us. I mean, our nat gas futures business this year up close to about 25%, and our options business up close to 50%. So if you're looking at the energy market and only think about crude oil, you're missing a huge story happening in nat gas, and I'm glad you guys touched on it today. The rest of the market, listen, equities have been on a one-way run. The options alongside the growth of the micro E-minis on the index side, on our side, and futures have been great, and options have tracked very, very strongly alongside those. And then we've seen other markets, ags and metals, just have a sideways year volume-wise, even though we've actually seen a lot of volatility and a lot of volume in gold particularly. So it's been one of those years where there's been certain asset classes that moved early in the year and have gone quiet, others like ags that were slow and have picked up in the last quarter, and others that have just been moving all year long like nat gas and equities. So there's no shortage of opportunities. If you're a volatility trader, if you're looking for something that's moving right now, Bitcoin's a great example of that. We've got at CME Group, whatever you're looking for, you can trade liquid futures and liquid options on these products. So no shortage of things to talk about, Mark, and some exciting sub-stories underneath those as well.
Yeah, we have a lot of things to sink our teeth into. I always ask you this every year, too. This year, maybe it stands out more than ever before that I've asked you this, because usually there's something that pops up on the radar throughout the course of the year when you're looking at your trends, whether it's volatility or skew or volume, a different name, that maybe stood out as a bit of an outlier. Maybe it came as a bit of a surprise to you and your team. 2020 was the year of just endless surprises, most of them terrible. But still, I'm curious for you, Derek, as you're looking back over the year and all the different products you saw trading and the volatility and the skew and the volume, all these different trends you guys are watching there throughout the year of 2020. Anything really stand out to you as saying, I never really expected that to happen at this time of the year, or anything really stand out as a surprise to you this year, Derek?
I think for us, it's some surprises, yes. Other surprises, no. It's been a standard year. When you tend to see markets where futures are relatively quiet, we tend to see options relatively quiet per asset class as well. Those markets that have seen substantial moves in the underlying, like we have seen in equities, like we've seen in energy, that's where we're seeing the highest performance growth on the option side. I think probably one of the most exciting things that we're seeing in our options business right now is the continued globalization and the utilization of our products into new client segments, and the way that we've added new functionality to our platforms. And we're particularly excited. I know we'll talk about the volatility indexes in a second, but we've done a lot of work on our functionality, our platform, and our capabilities, building out brand new functionality like things like directed request for quote, or DRFQ as we call it, which is a brand new functionality that marries kind of the best of bilateral transactions with a customer's ability to go seek as much input into that bilateral transaction as possible within the framework of a listed environment like CME Group. Building out CME Direct, all the work we've done with Bantix and Quick Strike functionality to build more tools to allow your listeners, our customers, to interpret exactly what the market is telling us. So it's been a surprising year to the extent that I don't think any one of us would have expected the kind of volatility we saw from say Feb to May, but very much an anticipated year in that continued growth, continued globalization, continued growth of our customer base across time zones is what we planned for. It's what we built for, and we're very, very excited to see the uptake of customers globally jumping on our platform, using the tools we've built, and providing us feedback on that next level set of tools they'd like to see us build to help them navigate through some pretty uncertain times. And 2020 qualifies, if nothing else, as uncertain times for sure.
Yeah, I think it falls into that category and many other categories as well. Well, you've touched on it a few times, Derek. We can't bury the lead anymore. I'm very pleased to say, by the way, usually you guys sneak these announcements out after TWIFO, and we get a delay. This week, you put it out before the show. We're very pleased to see that, Derek, so we have time to sink our teeth into it. Of course, I'm talking about CME deciding that Vol Q, perhaps not enough of a foray into the volatility realm. You're going back in and going back with gusto, announcing a suite of new implied volatility indices this week over there. You're calling them CVOL, and you're going to include a variety of different things. Looks like we have 6 different products in the suite out there, including the 10-year Treasury note and G5 FX currency pair futures. So starting in FX and treasuries, and then from there, who knows? Sky's the limit. So Derek, walk us through. I know you guys have already made some forays into the volatility space earlier this year. We just had Tim and the folks from NASDAQ on a week or so ago to talk about your VolQ partnership, and now you're going even above and beyond. Well, what was it that got CME to decide, 2020 is going to be the year of volatility, and we're going to dive in with not just one product, but a whole suite of them?
Yeah, hey, great question, Mark. And really, if I were to answer that question as honestly as I can, I always answer questions honestly. It's that next leg of growth and that next innovation step that the market, frankly, should be expecting us to take. We spent the last 5 to 7 years building the world's deepest, most liquid multi-asset class options exchange on the planet. If customers want to trade options on anything from crude oil to gold to beans to 10-year treasuries to FX currency pairs and anything in between, we are the place to do that. We've got the source liquidity, we've got the global liquidity, we've got the platform, we've got the market data and the distribution. And so what do you have when you have all that? It's great that we've got streaming options prices and streaming futures prices. And if you're a volatility trader, you've got your systems to be able to take the live prices and the futures prices and convert that to volatility. Well, that's not easily accessible to the average trader out there. And so it's hard sometimes to cut through the white noise of record volumes and record turnover and record open interest in these markets and really actually listen to the market data and interpret what it is that it's telling you. So I talk about this being the next and natural step for us to take. So moving from the deepest and most liquid markets on futures to then building up the deepest and most liquid options markets out there, combining those two and saying, now we can provide, since we have the source data for the deepest options markets, we can be the unique provider of a new way to look at the options markets and interpret what's going on. And that is by us providing the calculations for not just the volatilities of these products, but what we're really excited about is that we can provide volatility and a skew view of this as well. We call it up variance and down variance, and we also track the skew. And so what that means is we're tracking, yes, the overall volatility of a product in our benchmark futures products, but we can also, and we do display for you in the products that we're rolling out sequentially, the volatility, the up variance, the down variance, and the skew. So you can exactly see what the preference is the market's pricing in for, say, upside versus downside. So in equities, as you know, there's always a strong preference for downside protection, so puts are always premium versus calls. But when you look at markets and say, no, the market went up today, well, price up, price down doesn't really tell you how the market feels. Price up and maybe volatility steady or volatility down tells you, okay, that market's is expressing a view that I'm less concerned about that up move. But even if you had the equity stay straight on a day, and even if volatility was constant on the day, if you saw a increase in that skew for an increased preference of downside protection, i.e. the skew put going even larger, that tells you, hey, the market's bracing for something here. You overlay that with the data that we already provide our customers in the form of heat maps to look at the activity of our options across different asset classes and open interest information. And for the first time, with the introduction of our volatility index portfolio, customers can see the price action of the underlying, they can see the price action of volatility, they can see the price action of the skew, they can take a look at that through the eyes of the change in open interest, and you start to piece together exactly what the market is telling you. So it provides our customers, your listeners, with another tool to interpret what the market is telling them. And we're super excited about this. And you're right, Mark, we talked about this in terms of a phased rollout. So yes, we rolled out this week the treasuries and then 6 FX products. Our goal is that we'll be rolling these out across all of our asset classes over the next 2 quarters, so in the kind of mid-21. And right now, these are being calculated on a close basis. We're going to be looking to start to calculate those in real time in next year, probably mid to late next year or so. So for us, Mark, it's the next natural step in the evolution of our options franchise, providing information that's not available to customers now in the way that we've delivered it, not just the volatility, but the skew information as well, to equip our customers to understand what's going on, what the market's telling them, and how the market's positioned in terms of, comfort level of moves or great areas of discomfort. So we're really excited about this being the only place you can go for this information across every major asset class. So it takes an equities volatility conversation and it extends it to all asset classes. So that's what we're excited about.
I'm glad you broke down the calculation there, because that's obviously a very fascinating and, for a lot of people, a somewhat controversial approach. There's a lot of different approaches going on in the volatility space right now, and they all have their proponents and they all have their naysayers. We have, of course, when it comes to traditional equity volatility, we have, of course, VIX, which incorporates the skew, and that's proven to be controversial for some. We just had, of course, the NASDAQ folks on this show last week. They said we're doing away with all of that. We're going straight, just the facts, just at the money straddle to make it a little bit easier, a little bit more simple for people coming to the volatility space to understand. You guys have obviously decided to go back and try to incorporate the skew. Walk us through that decision, Derek. Why did you guys decide to go that way? And was there some interesting internal discussions about that along the way?
Yeah, and actually more important than the internal discussion, Mark, was the external discussion. We went to our customers and said, how do you think about volatility? What's important to you? What's important to interpret what the data is telling you as a user of the market, or if you're using the markets to understand kind of where those likely next moves are likely to happen. So our CVOL methodology very specifically incorporates every strike across the implied volatility curve, not just the at-the-monies, to calculate then a single volatility value that we call simple variance. And I think it's sort of a conversation around how long is a piece of string. If you start to debate this is better than that. It's different. And there's a different use for a volatility construct that just uses at-the-monies. There's a different use and construct for a VIX index. And there's a different use and construct for what we've developed. But what we've developed is what we've developed in partnership and with the feedback from our customers, because since we have deep liquid options markets in energy, ags, metals, FX, fixed income, and energy products, we have the unique data set that underpins all of this IP protected calculation that we can then provide to our customers. And the beautiful thing is we're all under the volatility tent. So all these products operate with a complementary nature to them. So I don't think that there's a binary outcome that says there's only one calculation and no other calculation for volatility matters. We've built the one that through customer feedback is indicated as the strongest indicator and helps our customers interpret that, not only in terms of what that headline value is, but I came back to the point where we talk about our up variance, our down variance, and our skew calculation, because that's not calculated anywhere else right now. And it's such an important component. Anybody that's ever traded options, the first thing you need to know is what's the at-the-money and what's the risk reversal, because you need to know what the preference of call versus put is, because there's no volatility in the world that's a perfect smile that's symmetric across both 10 delta calls and 10 delta puts. So knowing what the market preference is in the implied volatility curve is absolutely critical. So we think about this as an and equation, Mark, not an or equation. It's not vol-Q or CVOL or VIX. It's all of those things. And depending on what your trading strategy is, and depending on what other data you're incorporating into your decision-making matrix, and it could be all three of those, then we just think more tools in the toolkit of our customers is a winning combination for all of our customers and all of your listeners.
Well, Sean, I have many more questions here for Derek, but I can monopolize him for the rest of the show. But I know you probably have some questions of your own for Derek as well, sir, Sean. So what do you have here for Mr. Derek?
The same thing. Derek, first of all, great to be on the show with you. It's always great to be back with a former colleague and fantastic friend. I want to talk to you about everything you just talked about. You mentioned direct RFQ. I love the fact that there's the opportunity to, and this is, and I'm going to ask you about the volatility products right after I ask this quick question, but I'm going to just imagine for a second out loud is that to have DRFQ, I think you called the product, you're going to be able to choose who you want to RFQ with in order to print a block or a specific trade, or at least negotiate a price with your counterparties. Is that what DRFQ is? You're going to be able to choose who gets the other side of that RFQ?
Yeah, exactly right. So you know that we've got our streaming liquidity in our central order book on Globex, right? That's sort of that standard. And historically, we've also had a block market, which typically would be a bilateral negotiation using phone or Reuters terminal or something like that. And then we rolled out our RFQ functionality, which is very robust and a lot of people use. When you do an RFQ, you literally say, I'm looking for this strategy, and you just put it out into the Globex world via CME Direct or your front end from your own FCM or service provider if they provide that for you. And that then transmits out to the entirety of the community of anybody that's on the CME systems. Directed RFQ is that next iteration, that next generation step forward in terms of if you want to send out your explicit RFQ to a subset of participants, and this is a lot of the way how other markets actually operate, you can now do that in the fully regulated market structure of CME Group using the same front-end capabilities of CME Direct that customers use already. And we've actually found that customers were super excited about this because they know that there's a community of 5, 10, 30, 50 people that they can source liquidity from, and they can send that out seamlessly through the system. So for us, it's that next generational evolution of the RFQ technology, now directed RFQ, to make it more explicit. And we're finding that customers that are using it are excited about the likelihood for that being able to get better prices and better fills, and it's all integrated into our front end. So we're really excited about what that is, and it's taking some of the best known practices in kind of OTC or swaps market, but bringing it to the world where you've got the fully regulated infrastructure and connectivity to the rest of the listed derivatives in a CFTC regulated environment, all subject to the same rules and compliance regulation that banks and swap providers are already subject to. So it's a really, really neat way to take functionality, enhance that, and then bring new capabilities to our markets.
That's fantastic. And I have to just, I'm selfishly, I'm FTSE Russell, as you very well know. The Russell suite of products at CME Group have just had phenomenal growth this year, up just triple, quadruple digits in terms of percentages of volume. Not to mention open interest is just about 600,000, which is just a true statement of confidence in the market and the products being used as investments. So it's really exciting to see. But back to this DRFQ, the BTIC and block volume in Russell has exploded. I think it's up almost 70% over last year. So it's true. And I think this DRFQ is the functionality that's enabling counterparties to pick the people that they're comfortable trading with. But then they put the position on. They've got the opportunity to get out of it any way they want because it's a futures market. They can trade back out of it with whoever they want. And they can go into the market and just trade on the electronic system in Globex and increase their position or decrease their position. So it's a fantastic product. So congratulations. I'm really excited to see, and I'm very excited to see the growth in the Russell suite of products as well. Implied volatility indexes, incredible. I know you've been dreaming about this for a long time, Derek. I was just curious, timing, has this already launched, or is there going to be a launch, or have these products already launched? And what's the best way to take a look at these today?
Yeah, so they're up live on our website right now. So what we announced, Sean, a great question because I was probably a little confusing in my statements before. We announced the first phase rollout of the first 7 or 6 products that we're putting out to market, which are they're not tradable products. To be really clear, this is just the publication of the indexes themselves. So we're not launching. It's not a futures product based on these indexes, because when you put a product out, it needs to be based on an index. Then the index needs to be one that's understood by the market and has been interacted with by the market. So for us, this is rolling out the indexes. So it's just the calculation of the indices. They're up on our website. If you go to CMEgroup.com, just search by CVOL, CVOL, and that's just short for the CME Volatility Index. And there's actually a CVOL dashboard that has all of the products that we actually are now are publishing. And there's 7 products total, 1 in the 10-year, and then there's 6 FX products, 1 for the basket of the G5 currency pairs, and then 5 individual euro dollar, sterling dollar, Canadian US dollar, Aussie dollar, and dollar yen indices there as well. So there's a dashboard. Just search by CVOL, CVOL, on CMEgroup.com. You can navigate to the CVOL dashboard, and you'll be able to interact with these indexes. So what it tells you what the current value of the index is. You can choose your time frame and say, well, what was the high-low over the last 1 week? High-low over the last 1 month, 3 months, 6 months, 1 year, 2 year, year-to-date, and then all time for all the history that we have. So you can see both on a scaled window within the time periods. Are we at a recent low or an all-time low, or a low in the last 2 years, a low in the last 6 months, or a high for that matter? It shows you that over the last 5 days, is it trending up or trending down? It shows you the down variance and the up variance, i.e. it tells you that the volatility level of the call and the put, as it were, and then an outright skew price, which is the difference between the call and the put. And there's just so much information and such rich data in there. But to come back to your question, Sean, the idea is that develop these indices in conjunction with the market, roll them out sequentially. We're starting with one rates product, the 10-year, and the 6 FX products. We'll roll these out in our benchmark products in every single asset class over the next 2 quarters. So by the middle of next year, we'll have them out in crude oil, in natural gas, in gold, in copper, in soybeans, in corn, and on and on. So all of our benchmark products will be rolling these out. And the idea is that we want the market to interact with these because they serve as a means to help interpret what the market's telling you. So we're excited about what it means. We're excited in working with our customers and your listeners to explain how to use the tool. And we've got a bunch of educational tools and resources on there as well, explaining the technical calculation of the indices, but also the value of them, what they mean, and then we'll be rolling out more education pieces in terms of this is how you can use the tool and this is what to interpret in using the tool. So it's effectively taking all the product detail in disaggregated form, aggregating it, providing a window into the market in terms of volatility for both the headline volatility level, but also the skews themselves. And this is something the market hasn't had before. We've always had the component pieces, and we spent the last 2 years building this and putting this together, listening to clients and seeing where the gaps in their capabilities are and the data that they tell us they would benefit from having to help them manage their risk and understand what's going on more effectively. So the plan is that we'll roll these out in indexes over the course of all of our products over time, and then we'll see what comes of it from there. But our goal is to provide this data to our customers, free downloads of the last 2 years of historical data on our site so people can download it, interact with it, and start to interpret it.
You kind of just touched on the products that are out there right now. It's the 10-year on the Treasury and then the 6 FX products out there. I'm curious, Derek, how did you arrive at those? But maybe why not, let's say, one from each different complex to get a representative sampling? How did you come about the 6 FX and then the 10-year to kick things off?
Yeah, great question. We actually kind of took a bit of a straw poll amongst our product heads and said, let's start by providing a couple. Let's not wait until we had everything rolled out. Let's start to parcel these out in small pieces. So the overwhelming demand right now was, hey, we'd love to see something in fixed income, and a 10-year was the obvious one. It's our benchmark, trading a lot more than the 30-year right now. And then if you're an FX guy, you want to see an index. So we've got our G5 index, and we've got the 5 individual pieces as well. So as I said, in relatively short order, within probably 2 quarters, we'll have the indices in all of our benchmarks in all 6 of our asset classes. So we had to start somewhere, and we thought that responding to more on the financial side, the FX and fixed income is what we heard the most feedback for. So we said, great, we'll start there. But within 3 months, you're going to have a whole slew of additional products to look at. So if your listeners want to check them out now, go to cmegroup.com and just look for CVOL and find that dashboard. It's fully interactive. We built it with your friend and mine, Nick Howard at Bantix. So it's QuickStrike is done a lot of work here to help build and develop this thing. So they are great tools and a great interactive site to let customers interact with the data.
I'm looking at it right now, listeners. There's a lot of functionality there already, even though they are still just daily at close type of indices. And yeah, you mentioned you're going to start rolling out real time next year and other products. But I know, Derek, just from knowing our audience, we're probably already getting it as we speak from the folks who are listening live. People hear volatility and they want to know when are they going to have some sort of equity volatility product. They're just synonymous for a large swath of the audience out there. So I know, again, this is a long way down the road. We don't even have tradable products in the ones you've listed now. But give them any glimmer of hope, any insight you can give them on when they might see something like that come down the road, sir.
Yeah, as I said, we'll be rolling the indexes out, just the non-tradable indexes out, and we'll have all the asset classes covered by the no later than the end of Q2 next year. So we'll give us about six months to roll everything out, but it will be a consistent parceling out of products over the course. We're not going to wait 3 months and then drop a bunch more and then wait 3 months. We'll just be iteratively dropping these things in. So you'll see this dashboard that currently is 7 indexes. That's going to grow pretty rapidly and pretty consistently over the next 6 months.
And obviously, we're still a long way away from tradable products. We're trying to get real-time disseminated out there next year. If you had to give our audience a guess, because I know we're going to get this this question next as well. If you had to guess, do you think we'll see some sort of tradable CVOL by the end of the year, Derek? Next year, of course.
By the end of 21, we'll see. We're crawling before we walk, before we run with scissors. So we're going to try to be smart and make sure that we're locking these things down. Listen, this intraday and real time calculation of these things is no small feat. There is a boatload of data that goes into this calculation. So we want to make sure to get it right. And listen, we run derivatives markets. You guys know this. You know more about derivatives markets than I do. Unless the underlying is rock solid, your derivative on a less than rock solid underlying is likely not going to face a great deal of success. So our goal is to make sure that the foundation upon which we're building these suite of indices is rock solid, which is why we're starting with just close volatility initially, roll these out, and then parcel them out into real time. And then we'll see where that takes us from there. What we're really excited about, Mark, and kind of Sean, you touched on this as well, the client interaction piece and the engagement we're getting and the questions we're getting and the demand that we can source from customers now that we're out there saying, here's our plan. Now we're getting the customers to help us drive the roadmap of, well, how much client demand might there be for adding this functionality or that functionality? So we're going to let the clients help drive that agenda for us. Right now, we're focused on getting the foundational building blocks of close volatility across all asset classes and roll those out, and then go real time, and then see where that leaves us and see where the customer feedback is at that point. In the meantime, we welcome everybody to jump right into the super deep liquidity pool that is options on every major asset class at CME Group, because that's really what differentiates us from other folks out there. The depth of our liquidity, our global volatility profile and client participation that is becoming a calling card for what we developed on the option side at CME Group.
Since we're talking about the depth of that options liquidity, and we're also talking about volatility right now, we might as well hang our hats in the equities complex really quickly.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. I know you're all teed up with all that talk of volatility, so let's get into it. Let's set the volatility landscape here. Coming into showtime, we saw our old friend RVX, which is, of course, the VIX of small cap, down nearly 2 points to about a 30, almost even out here on the show. So about 1.9 points lower than where it was this time last week. VIX cash come into showtime at about 23, almost in a quarter, down about 2 1/3 handles from where it was last week. VVIX, the volatility of volatility in the equity space, at about a 115 even, puts it down about 6.5 points. And the newest edition, well, the previous newest edition, now we even have even new additions to the volatility landscape, but the previous newest addition to the volatility landscape, aka Vol Q, at about a 24 even as well. That's down about 3.7 points from where it was this time last week. Coming into showtime, we saw that VIX RVX spread, so the large cap to small cap volatility spread, at almost 7 points. That's pretty wide. It's about half a point wider than where it was this time last week. And the VIX to Vol Q actually is pretty close, within a point. And again, those are not exactly apples to apples. It's more like, as I said on the show before, kind of like apples to tangerines, given the different methodologies in place there. But still, interesting. That's our kind of run of the equity volatility landscape. Sean, before I break down what's going on really quickly out there in equity land from an options perspective, anything lighting up your tape this week in small cap land, sir?
But yes, there's quite a bit going on at FTSE Russell. I'm going to tease the audience with just a blur. We're about to launch a blog in regards to we examined the volatility coming just prior to the election and post-election. I think we've been talking about doing some analysis of that. So we're going to be possibly posting that as soon as tomorrow. So hopefully I'll be able to send this over to you and Gene so that you can blast it out to your clients. But it's quite a fantastic read. We also on Thomson Television, Thomson Reuters TV, our Philip Lawler did a fantastic job being interviewed during a newscast a couple of days ago. I can't give that to you yet. Trying to get that, but you can go to Reuters Television and check out Philip Lawler. And hopefully we'll be able to get that on our website as well. But when you want to look at these blogs and other posts about index performance, especially small caps, and what's been going on in the markets in these last couple of days. And, FTSERussell.com/blogs, FTSERussell.com/webinars. We've had some fantastic webinars in the last couple of weeks in regards to market movements, the index performances, pandemic performance. It's all there. FTSERussell.com/webinars. But that's what's going on. That's what has been going on.
There you go, listeners. Check it out, FTSERussell.com/webinars. You know where to go for our TWIFO report, CMEgroup.com/TWIFO. So once you're done searching for all that CVOL stuff, type in TWIFO or TWIO, TWIO, and you can get to our reports. Pull it on down to the equities if you want to follow along with where we are right now. First stop here today is going to be out there in the small caps. They've been lighting it up. Listen to our Advisors Options show. We just did not too long ago talking about how the skews in small caps are just exploding at levels pretty much that people have been tracing the data have never seen before out there. So fascinating stuff afoot, I should say, out there in small cap land. Coming into showtime, Russell 2000 had about a 1770. So well north of that 1600 level we were talking about not too long ago. Can it sustain it? Can it maintain beyond it? Well, spoiler alert, the answer is yes. The most action out here this week coming on CME in the DEES contract. It's about 31, almost 32% of the paper out there. If you're wondering out there, the DEES vol is at about a 27.5, so about 2.5 points below where we're seeing the RVX. So again, that shows maybe vol a little bit backward out there in the Russell 2000, which is probably not exactly surprising if you know anything about equity volatility. Coming into showtime here, the skew, the puts were about 13% rich last week. This week, they're 14, almost 15% cheap, up 14.7%. So puts getting a little bit more bid. The calls, 9.7% cheap last week, 9.3%. So calls getting bid up a little bit. It takes a big pop, I guess, to make the make the calls get any love out here in small cap land. Let's see what the most action was. Even though most of the volume was in DEES, the biggest print was coming in the 1310 puts. Once again, very far out in terms, these are in Jan, and also far out of the money. Puts are dominating the tape out here in Russell 2000. I'm not sure what it is about the small caps in particular that keeps driving all this far out of the money put paper week after week, despite the fact that the index keeps rallying. But that's what we see yet again with pretty much a big block coming on Wednesday, on yesterday, and all of that opening. So opening 1310 puts in Jan, the order of the day out here in small caps. I could talk more about equities, but we have to keep on rolling. Derek, we have time for probably one more product before we get some of the listeners on. You know, in your day-to-day over there at CME, you get to watch over the entire option spectrum over there at CME. So if you had to hang your hat right now on one more product, where should we go next, Derek?
One more product. Well, can I say CVOL again? Because I'm super excited about that.
Yes, you can say CVOL.
That's pinned to trumping everything else. I mean, we're constantly putting new product out there, and in fact, we announced the soon to be launched Cobalt futures contract today. So listen, we're excited about the opportunities across all of our asset classes. But when we talk about the things that impact the enterprise as a whole, like just the opportunities to bring more people into the options trading tent, and if volatility and an interpretive tool like CVOL allows more customers to interact with our options markets, literally everybody wins as a result of that. We're a network business, right, Mark? I mean, and Sean knows this. You bring one more client into the mix, it's not because another client had to leave. That's net additive volume and participation for everybody. That's good for open interest. That's good for volume. That's good for price discovery. That's good across the board. So I'm excited about the stuff that we're doing, like directed RFQ, like the CVOL indices, because they expand across the entire franchise and it brings more customers into the network. And that's where everybody wins. So those are the kinds of things that get me really excited. I mean, the rest of the individual product launches are neat and innovative, and I think are individually additive to an asset class. But it's these big enterprise stories that are new functionality, new capabilities, new ways to understand and interpret what the market's telling you that get me pretty jazzed up about the stuff that we're doing.
I get it, Derek. They're all like your children, the different products of it. I know it's hard to choose amongst your children, so I will choose for you. Let's go on out. Let's look at our top 10 to the or top 5, I should say, to the upside and to the dark side. You know, natural gas has been dominating the tape from a vol and from a net movement perspective for a while now. It's been a little while since we've had a chance to bring it back up here on the show. It is number 2 to the dark side this week, off nearly 13%, outpaced only by Class 3 milk. We won't get to Class 3 milk today, listeners, because there's only about 6,000 contracts on the tape. But still, Class 3 milk moving and shaking a lot out there these days as well. But Nat Gas is doing a wee bit more paper. Closing in on 500,000 contracts here coming into showtime. So a lot of action out here in Nat Gas. Let's break it all down really quickly. By the way, you guys can always find this CMEgroup.com/TWIFO. Then go into the energy, go to Nat Gas, and you're off to the races. If you did that, you would see that it was actually the Dees contract, which has about 5 days to go, doing about 30% of the paper. But you know how I feel about breaking down the vol and the skew in a product that has 5 days to go, listeners. It's kind of a bit of a fool's errand. Let's go out a little bit further. One more month. Let's go out to Jan, and it still has a lot of paper, about 26% of the paper this week. So still a pretty active contract, and we'll hang our hat out there this week. By the way, coming into showtime, we're seeing that front D's contracts at about 2.57. You go a little bit farther out to Jan, that future's at about a 2.7, but still a lot of red on the screen here this week in all things Nat Gas. In terms of the Jan contract, what is the vol out there? It's pretty hefty. It's a 58. So we talked before, the few other products like Bitcoin and others have managed to exceed that 60 vol. WTI was there very briefly, but it's very hard to maintain that. And so far, at least, it looks like Nat Gas is managing to maintain it. There's enough movement out here to merit a 60 volatility because it's effectively unched here on the week. In terms of skew, the puts were 9.3% rich to the cheap to the at-the-money last week, and this week 13.1% cheap. So puts getting cheaper. Maybe not that surprising as we're kind of blowing through some strikes here to the downside. The calls about 16% rich last week, 17.3% rich this week. So some folks looking for maybe a little bit of a rebound, but again, as you're moving down that skew, you expect the calls to get a little bit richer. Looking at the shift and slide, not a huge movement out here in terms of jumping off the skew bandwagon here. Let's see really quickly. Let's see, what was the number one contract out here? I said we're at about a 2.57 in that front future, 270 beyond that. It was the 2.5 puts going out in December with about 5 days to go. Leading the tape this week, 26,000 of those on the tape here for number one, followed by, let's see, looks like the 3.5 calls in Jan were also pretty active. Those had about, looks like 18, almost 19,000 going up this week. So that's a pretty hefty strangle. 2.5 puts on the downside, 3.5 calls on the upside. Either way, a lot of wing action going on here in Nat Gas as this product continues to fly around all over the place. You guys continue to send your questions flying at us. Let's see how many we can squeeze on as we head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. Let's dive right into it. Got some great questions this week. First off, we've got Rhythmic Angel. I like that handle. Very, very peaceful. He says, hi, Mark. New listener here. Great show. Well, thank you, Mr. or Mrs. Angel. Thanks for all the inside info on exchange mechanics. I do have 2 questions, if that's okay. Well, usually we tend to limit you to one there, Mr. or Mrs. Angel. But, since you asked so nicely, we'll cheat and let you have 2. His first question. CRUDE has an instrument type called TAS, aka Trade at Settlement. Reading through this type of product, it means the price is published only end of day, and big players position to this trade because they like to hedge inventory at one price. My question is, because this does not have an intraday price, it's hard to tell what the intraday P&L is. As you can see on the attached, he puts a list to some people trading this around some of the tumult earlier the year in crude oil. He wants to know, can you provide some insight into how this product can be proxied for a price intraday? That's the first question. And then the second one is equity indexes. He says, if I buy the index itself, the components under it, which are shares, do they reprice because otherwise there is an ARB opportunity to go take the opposite side on the share itself? Thanks. Well, maybe we'll start with the second one first because, yeah, you're a little bit of confusion there between, the cash indexes that are being disseminated on things like the S&P, for example, and then, of course, the futures, which are the actual trading vehicles. And yes, you are correct in assuming that they will effectively reprice because, as you see, there will be ARB opportunities there, and these large firms out there making markets are not going to allow them. You're not going to see the S&P futures 30 handles away from the cash and nothing changing in the intervening thing. People are going to start ARBing the components of the index and get it right back up to make it in line. So yeah, you will see the ARB opportunities. And you might see some little discrepancies here and there throughout the day because, one's tradable and one's really not. But at the end of the day, yes, there will be ARB opportunities. So don't worry yourself about those. Probably not going to be something you're going to have an opportunity to take advantage of as well. They're probably not going to last too long, and it'll be some large liquidity providers and large firms out there that will have the position to take advantage of that. But the first question is kind of interesting. We haven't really talked about these too much before. Derek, I know you oversee a lot of the options products over there at CME. He's asking specifically about CRUDE, but these types of orders exist in other products as well. Since you're our registered exchange representative here on the show today, sir, I'll give you pride of place before I and Sean weigh in here. What are your thoughts on the notion of these TAS, these trade at settlement products? What kind of use cases you see people using them for out there? Is he correct in his supposition that it's the big players who want to pretty much hedge just with one price at the end of the day? And then what do you see when you're talking to some of these firms about how they manage the intraday risks? Or anything you have to add there, feel free.
Yeah, good question. I think TAS, you're absolutely right, Mark. TAS has been around. We have TAS in almost every market that we have on our exchange. It exists on other exchanges as well. Been around for a very long time. It is a trade type. And what it does is it allows customers that are looking to just get exposure to the final settlement price. It allows them to just execute either a buy or a sell TAS, and you can actually determine plus or minus a fixed number of ticks based on the product from that settlement price, and that gets matched at the end of the day. So what effectively, think about it this way, and it's actually not just for big customers. Largely what TAS is used is guys that actually have an underlying exposure, and for the real hedgers out there, big, medium, small, or whoever, they just want access to that settlement price as cleanly as possible. Otherwise, say, for example, someone's got a guy that owns CRUDE. If he's just trying to do average settlement prices over the course of a month, then he's not going to be trading intraday. He's going to be indexed against the average of daily settlement prices. So it allows customers to match that settlement price without having to actively trade around it, which can create a whole bunch of slippage. So TAS as a product type is hugely popular, has been in many markets for over 20 years, and widely used by mostly end users, those customers that have open interest, have an exposure, and they're looking to hedge that exposure. So there's really no such thing as a P&L on TAS, because by definition, if you sell TAS, that just means you're going to be selling at the closing price that day. So technically, the P&L of a TAS sale or a TAS buy is zero because the TAS executes at the settlement price. So the point of a TAS order is to allow customers to match that settlement price and not have to actively buy and sell in those last 2 minutes of a contract to try to match the settlement price exactly. So it's not there is no intraday P&L of a TAS transaction. You would either buy or sell TAS. You would get the settlement on that day without having to be in and sort of actively traded on the day. So hopefully that clarifies what TAS is. And it's just a transaction type that's used by generally customers that have an underlying exposure. So we don't see speculators use them. We tend to see commercials and participants and user long-only guys in the equities markets or otherwise. So TAS exists in a lot of markets, not all markets, but hopefully that explains what that trade type is and why people use it.
Sean, anything to add, A, here on TAS, or then B, on his second part, his equity index question, sir? Have at it.
Yeah, I don't. Derek's, he's the exchange rock star here, and I'm listening to him, and he taught me some things I didn't even know. So I actually don't have anything to add. Just great answer there, Derek.
Well, then we'll squeeze in one more question here really quickly. People obviously like Bitcoin. They like learning about what's going on. CME, Bitcoin. Leon Thompson falls into that category. Leon says, can you give us a rundown of the activity on CME crypto options with the current explosion in Bitcoin value? Thank you very much. You're right. Bitcoin is off to the races at about 18,000 on that front contract right now over there at CME, 18,130 beyond it. So we were just talking about 9 to 10,000 out there not too long ago, and then 12,000. Now here we already are at 18,000. We're not that far away from the all-time highs out there, listeners. By the way, CME tweeting out right before the show here today. On the futures side, average daily open interest in the Bitcoin futures up 17% from October to about 11,600 contracts. The large open interest holders at a record 402. Let's see what we're seeing on the options front. You guys know where to go, cmegroup.com/TWIFO. And then you go to that. There's a whole segment just for this called cryptocurrency. Pull that up there, listeners, and you could follow along with me out there. Remember, these are off of the futures, which is set off of the Bitcoin reference rate, which actually aggregates the values across multiple venues out there. So it's not just one closing settlement price at one venue. It's multiple venues kind of aggregated together out there. And coming into showtime, we saw the lion's share of the action was out here in, we'll see, there was action pretty much across the board here in all things Bitcoin, but the lion's share of the action coming in, looks like the Feb contract here with about actually, no, I'll take it back. It was March. March was where the action was. It was the March 20,000s. So, we talk about people in our Crypto Rundown show, and I encourage you, Leon, if you haven't done so, check out that show. We put it out every Monday. One thing we've noted is crypto derivatives traders love a quarterly. For whatever reason, the volume tends to really surge and aggregate around these quarterlies. And so March leading the dance right now this week doesn't exactly surprise me. It looks like it was maybe an 18,000, 20,000 vertical going up here, roughly about 250 times going up on Tuesday and Wednesday. Remember, that's a 5X contract out there as well, so 5X multiplier for those contracts. So it looks like a little bit of a vertical, maybe, but it looks like it was closing on both, which is kind of interesting. So maybe someone had the 18,000, 20,000, started to take it off. Again, kind of hard to argue with them. We blew through the 18,000 strike, so you hit their lower strike. Or maybe they were shorted and they wanted to take the risk off. Either way, seems like closing paper on the March upside is where the action was this week. Let's go out to see where the March volume here. March, by the way, March vol in Bitcoin right now, 75.12. It's been hovering around a 60 for a long time out there. Now in that March contract, getting out to a 75. Let's break it down really quickly here from a put and a call perspective. If you're wondering, is there a bias in one direction? Yeah, it's extremely biased to the upside, as you will see right now. The puts were 2.4% cheap last week, 3.7% cheap this week. So puts getting a little cheaper. Calls 31.6% rich. So it's already a 75%, listeners, in the at the money in March. You have to pay a 31% premium on top of that if you want to buy that 25 Delta call in March right now. That shows you how rich it is to the upside. Last week, that was last week. This week it is 28.9%. So a lot going on out there in Bitcoin land out there. I encourage you, check it out, and you can find the reports for yourselves. It's pretty much one of the only places you're going to find these kind of breakdowns here for the crypto options at CME. So CMEgroup.com/TWIFO, the place to go for all of that. And unfortunately, that music means we've got to go here. That's the end of our sojourn through the world of all things futures options. Man, it's amazing how fast an hour flies by when you're talking new volatility products, you're talking equities, talking crypto, TAS, all the other. You guys keep those questions coming. You guys really keep us on your toes, and we love it. But before we go, let's go back around the horn. Derek, as our guest, we talked quite a bit about all things CVOL. Give our listeners one more time, sir. Is it the other times weren't enough? We need one more. Remind them where they could go if they want to learn more about CVOL, check out the indices for themselves, and if they have any questions about CVOL, what they should do, sir.
Absolutely. So check out cmegroup.com. It should be up on our banner there. All you can do is search by CVOL, CVOL, and that'll get you to a CVOL dashboard page, and you can interact with our indices. You can pull up historical information. You can pull up charts. You can pull up window times, a frame of reference of 1 week, 1 month, 6 months, 2 years. you can just have an absolute ball. We've got a load of educational documents. There's a nifty little 5-minute video explaining what volatility indexes are, what CVOL is at CME Group. So we've overloaded on the client-friendly communications and educational pieces. So check it out. There's just really, really good stuff there, and we'll be augmenting that over the coming weeks and months as well. So keep coming back, and you'll see fresh content there as we add new indices as well.
Yep, so when you're out there searching for CMEgroup.com/TWIFO, maybe make sure you also type in CVOL over there. You get all those indices. And looking at it right now, listeners, it's got all the different products out there. You can change the different durations out here. It's all already, even though they just launched, there's already a lot of stuff you can do. And as Derek alluded to, more coming in the near future. So stay glued to that CVOL page there, and you can see it for you. It's got the methodology. It's got all those questions I know you're going to have. A lot of them are answered right there. And Sean, you kind of alluded to it at the top of the show. You guys have a lot of content coming in your neck of the woods pretty soon, too. If folks want to check it all out, where should they go? What should they do?
Well, but before I do that, I just want to say, Derek, it was great to have you on the show. Great to catch up with you. You and I need to catch up on the other side of this COVID thing, and I am looking forward to that day of seeing you again. And congratulations on the new volatility indexes. I'm very excited to see them rolling out, and the best of luck. And I can't say enough about our partnership with CME Group here at FTSE Russell. We are as focused on our clients as much as CME is. We have our clients. We have clients in common with CME, and we collaborate with the CME sales force in improving our products and improving and helping CME improve their products, all based on client feedback and how important that is that we provide the products and solutions to our clients. And most importantly, in partnership with CME Group, it has been just a successful and continues to be a successful partnership. So I'm just very excited about all of that. To answer your question, Mark, FTSERussell.com/blogs, FTSERussell.com/webinars. An incredible amount of information in regards to our index performances, various webinars in regards to our existing economy, COVID information in terms of index performance. The blogs have been fantastic and have been in partnership with our exchanges, CVOL Global and with CME Group. So there's just a fantastic amount of information. And be on the lookout. I'm going to send you tomorrow a new blog that's coming out on some analysis on the election. So lots in-house for you right now and lots coming. So thanks again for having me on the show today.
There you go. Lots coming on both necks of the woods over there at CME and indeed at FTSE Russell. Check them out. FTSERussell.com is the place to go for all that content and all the stuff Sean just mentioned coming down the pike in the near future. Give them a follow over there on the old social medias while you're at it, at FTSE Russell on the old Twitter machine. And on behalf of Sean and everybody over there in FTSE Russell land, and of course Derek and everybody over there in CME land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions, for listening live, for everything else that you do. Keep it coming. We'll see you back here on the network tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. Then it all kicks off again on Monday with the option block and the crypto rundown all the way through to Thursday. And another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.